So, welcome to today's podcast. Thanks for joining me as always. I really appreciate you guys listening, and hopefully, you're getting something out of this to help you not only build your life, but certainly your wealth. And, it's funny, I was thinking about the other day, and there's so much information out there and advice on how to build wealth, all the unique strategies. And, I've come across this other perspective on improving things is to almost think of the opposite. What are the things that would ensure that you failed financially, right? In terms of building your wealth. And I think it highlights kind of some of the more obvious things, but kind of gives a different perspective. And evidently, it's a lot easier for us to identify problems than solutions. So, maybe this is a better way to kind of at least tackle it, to kind of maybe put a different perspective on it, and sometimes highlight some of the more obvious things that we can easily overlook. So today I'm just going to cover some basic topics on things you would do that if your goal was to fail financially, just follow these steps. And on the flip side, we'll share some highlights on maybe things you can start doing now to kind of right the ship if this is you. So the first one I was thinking about is to never track anything in terms of what you're doing financially. And, just like the adage is, if you can't measure it, you can't manage it, right? You kind of just flying blind. And unfortunately, I've come across this very often, seen it where people don't really even know where they are, financially, from a cash flow situation, or what does their balance sheet look like, their net worth. And so they may understand maybe what's sitting in their 401k account, maybe, but hardly do they ever kind of understand the full picture of kind of what's happening in their financial lives to maybe even detect if they're succeeding or not. So it's kind of just, potentially sticking your head in the sand and hoping that at some point it's all going to work out in the end if we just keep trudging along. I'm not saying that you would check this all the time, but having no mechanism to kind of periodically monitor and assess kind of what's happening is probably going to contribute to the failure of your financial plans and aspirations, right? It's just like anything else, whether you're running a business, right? You treat your finances like a business. If you're not tracking and analyzing kind of performance, how could you know if you're winning or not? And certainly we always harped on this concept that hope is not a strategy. So having a sort of way to assess and monitor kind of what's happening is key. And there's tools out there now that you can use, and some free, but certainly getting with some advisors that you can kind of aggregate what's happening in both your personal and your business life are going to be key to give you a chance to take a step back on occasion and monitor it, right? Where is my net worth these days? What is in particular cash flow, which is what is the lifeblood of our lives? Like, what does that look like on a monthly basis? And are we actually showing positive cash flow, or are we actually in the red, unfortunately, which could be the case? So taking steps to put in systems and utilize tools to help you measure it will help you course correct as needed if you're not kind of going down the trajectory that you want. At least gives you some red alerts and mechanisms to sort of highlight to you when, like a dashboard to show you where you maybe need to course correct. And there's a lot of tools for that. So the second thing to do, that if you want to ensure financial failure, is, I kind of hinted at it, don't have a plan, right? If you're kind of running aimlessly, and we always think about this, right, in the simplest way, right? Now you take it for granted, right? The GPS, right? You don't need a map. You just tell your GPS where to go, and it takes you there. Well, I remember the days when you had to use a map and kind of had to manually do it. So it's crazy how far we've come. But there are many folks who really don't have a comprehensive plan on where they're going financially. It's just kind of treading water and moving along, working and building wealth, putting in things that maybe they're not sure they understand, but there's no cohesive plan to protect and grow your wealth. And so it really leaves it up to a lot of chance and hope again. And so not having a concerted plan on where you're going in terms of how much you want to save and invest, and kind of where you're going to invest and what that looks like going forward, it makes it very difficult to understand if you're actually succeeding, and are you making the progress that you ultimately want to, on an annual basis and certainly over courses of time, which I do believe is important to also take it and look at your financial life over periods of time, not on, say, a daily or a weekly basis, because you may not see all that much movement and it may not be meaningless. But having a concerted plan, and sometimes that takes, stepping back, and there are folks who do this now that maybe just helps you look at all the different areas of your financial life, from the things you do, from your protections to where you're investing, and do you have a estate plan in place? All those sorts of things that create a foundational lens of your financial life, and at least give you a direction and plan of where you're going. And are you sort of maximizing what you can with your finances? And so having maybe a secondary opinion to kind of take a look at your plan would be helpful to get your foundation straight. And then you at least have direction. You could always revisit and pivot as needed along the way. But, most people maybe don't even have a plan really in place that they could even articulate to anybody. To just kind of going with the flow, which is likely a recipe for financial failure, or at least not reaching your goals fast enough or at your pace. The third area that I thought about was to essentially stop learning, right? We all know that personal finances is a topic that is not taught in schools, and maybe it's rightfully so that they are not teaching it, but it doesn't come up in households either. And so unfortunately, a lot of people are going into this world and growing up without proper financial education and are running essentially illiterate. And so they learn what they can from, their environment growing up, and hopefully, some of it from influences of friends and family and such, that gives them a starting point, but they feel that they have enough to kind of go forward, and they stop learning and growing. And just like anything else, if you're not growing, you're dying. And that's in any aspect of life, I think, certainly as it relates to your finances, that, there are some tried and true principles that are important and are going to stand the test of time. But a lot of things change, as we know, and the environment changes, our economies change. And certainly, just like anything, they evolve and get more advanced. And so having a lens on constantly growing and learning and exposing yourself to new areas will be key, because things will never stay the same. And we just have to come to grips with that, or we put ourselves in position to fall behind. And that is certainly a recipe for failure, and things can change very quickly. So that's why, whether it's you doing your own research and staying on top of things in a financial level, or relying on experts or advisors or resources that can help you stay abreast of these things, whether it be around taxes, to where to invest, to unique laws around state taxes, or whatever it is, there's a lot to consider. But how do you stay ahead of it yourself, and then with your team of potentially advisors that could stay abreast on all the key topics that may influence your life? But you got to stay in constant learn mode. And what I have found with a lot of the most successful people I've come across is they're humble, they're open-minded, and know that the learning is part of the fun. It's part of the journey. And it's hopefully exciting, because the more wealth you have, the more you can control and confidence you have on it, the more you can do, right? For yourself, your families, and others. And it's not a bad thing. So, but you got to commit to kind of constantly learning and improving yourself in that area. The fourth one is kind of related in a sense, is that there's so much use of the internet, which, again, we think about Chat GPT and other social medias and such, and talking heads. There's a lot of information being thrown out there, and so it's good, and it's a benefit to have at least that out there, versus it typically was hoarded by some institutions or the government and such, and it was only for select people. But now it's out there, but you have to fact check it and test it and look into it. It's almost that concept, trust but verify, but but verify it, because you never know. And there could be a lot of exaggerations, misinformation out there. So only relying on, say, what you hear in the internet is tried and true without looking into it is a dangerous proposition, that you could be either missing a lot of information that could, give you the truth, or it's just false and they're selling something. It's a marketing ploy. But you got to look into it for yourself. And that goes into sort of constant learning and not just relying and trusting completely on everything, right? You need to take a little time to research things and confirm that they're accurate and they're sharing you the right information. Yeah, again, and once you have enough, you move forward, right? But you can't study it forever and overly analyze it. But you also have to be comfortable with that. Hey, let me do some digging and verifying these sorts of things, whether it's talking to others or doing your own research. It's important. Don't always just rely on what you hear because there's always likely an angle to it. And, again, not all people, I think most people are good people and such, but there's just a lot of exaggerations or misinformation out there. Next one, a topic I really hits home for me for sure. And that's thinking short term and making rash decisions, and in early my days of investing, I think I did that. It was kind of one of those, the shiny object syndrome sort of thing where you're popping your head looking around and, not doing enough due diligence before you leaped into an investment. And that can be very dangerous, and thinking very short term, right, about where you're investing or planning for your finances. Yes, there are short-term things to maybe consider, especially if, goals and priorities coming up, like paying for college or you're buying first home. And, again, there are short-term things to consider. But overall, when we're thinking about our personal finances, having a long-term lens is going to really help you sustain your progress and sort of your decision making, right? Because if you're just thinking short-term decisions, right, in the moment, you may make decisions that maybe benefit now or at least short term, but you're not really thinking long term, and it could come back and bite you in the long run. And so, it's really important to take both lenses into account. But oftentimes it can be the emotional reaction to something, or selling when the market goes down, or looking at your tax bill and say, I got to do something rash to kind of cut it, and it may turn out back to bite you. So it just really requires you to, have some discipline to not only consider short term, but also the long term impact of what you do. And that's a lot as well. And that's why you talk to others and get the advice. And hopefully over time, your experience and wisdom comes into play. But early on, make sure you're talking to more people and making less changes along the way than more, and ensuring that it fits your overall plan before you leap. And that's just personally for a conservative nature of the way I think about it. But, not having a long-term lens can bite you in the end. Like, take, for instance, we get so enamored with saving taxes now and we put them into deferred accounts. And there is rhyme or reason for it, but, to put every single dollar in there and defer them because it feels good now to have a tax benefit reduction now, but you're building up a tax target that could be multiple millions of dollars that could be easily under control of a government account that you're going to have to withdraw from and take taxes. And we don't know what tax rates will be. So that's just a very simplistic answer. It's not saying that you don't do that, but you got to take that in the context of the broader picture and say there's a short and long-term lens to all of these things. And we have to account for both of them. Sometimes we want to save a penny now, and we're going to pay $1 later and be very painful and costly. So we have to factor those in. Next one is around debt, and debt is a very controversial topic to consider. And we're at that time of this recording, interest rates are still higher than what people have grown accustomed to. And it's, seeing some kinks in the economy around where this is potentially slowing things down and reducing economic activity because borrowing costs are higher. But, for us in our personal economies, and certainly if you're running a business too, is thinking about how can you strategically use debt for productive purposes. Definitely do not be using massive amounts of debt to consume, right? That is unfortunately what people have been relegated to doing now, just to kind of make ends meet and, deal with the higher inflation that we're seeing for all things virtually. And that unfortunately seems like it's going to continue for a while and be around for a little bit. So we have to figure out ways to maximize our wealth broadly. And sometimes that requires to take on debt for strategic purposes, to grow our business, to invest in assets, right, that we can own and control and use someone else's money, but we have to do very wisely. But first and foremost is to try to avoid it as much as possible for unproductive purposes, like, buying things, vacations, whatever it is, taking on debt that isn't tied to an asset that could produce for us is just a slow road to pain. And that can certainly ensure that you can never get ahead and save money, and you're just beholden to the creditors to continue to pay and pay them a lot of interest over time. And so we have to kind of factor that in as we're sort of building our wealth to position debt and leverage smartly and use it for good purposes more than not. So lastly, a point I want to make is, I get often asked where to invest. Where should I invest my money? And as you all listening know, there are a host of places to invest your money. We always push to say invest in yourself and your skills and things that you can own and control. But a sure way to fail is invest in things you don't understand and can't control, right? For the vast majority of your assets. Now, I understand that there's places to take strategic risks in places that could have outsized returns. And I am a big proponent of that. And certainly, hopefully, it's not a big chunk of your wealth. But if you are going to go to ensure you fail, is invest in things you have little to no understanding how it works or the operators or people involved, and hand it over and then pray, right? That, to me, is a recipe for disaster down the road at some point, right? And so make sure as you're getting into investment or considering new investments in a business and real estate, whatever it is, stocks, bonds, Bitcoin, that you spend enough time up front to research it, to make sure it fits into your overall plan before you make a big leap in investment in anything, right? We're so trained to just, pass our money into markets and it'll all work out in the end. And I said, maybe in the long run, but I think that's a slow train, right? I would suggest you invest more in building up your capabilities as an employee, or invest in a business that you can own and control would be better served over a long run for a chunk of your assets. But more importantly, that it gets into an area that you know more about, right? And you have some level of maybe advantage or expertise or network that you can de-risk that investment more so that, you get more of the upside of that investment as opposed to the downside. And it'll put the advantage to you, right? That's why, Warren Buffett, you hear these things like, he wishes you had a punch card and you only could use that number of decisions to make investments. You probably would think more deeply about where you invest because you would analyze it more, dig deeper, and take the time, because some things could be a long-term investment that you hope to hold for forever or a long period of time. Wouldn't it make prudent sense to invest more of your energy at the upfront to review them and ensure that they fit you and what you're trying to achieve financially? I think that does make sense. And we're all guilty of it, right? You see these things and different things that are, we get FOMO and we want to get in, but taking a measured approach, go slow to go fast. And that's something I've adopted personally for myself, to kind of look at these things and don't leap too fast, right? Or don't invest massive amounts. Slowly learn about them, invest a little bit and experiment so you can learn and get comfortable with it before you push it all in. Like we're thinking about poker, right? We're too easily sort of pushed to go down that road and bet the farm. Well, I think that is a recipe for disaster for a lot of cases. Yeah, could it win on occasion? For sure. You could get lucky and benefit, but I think for the vast majority of folks, spending enough time up front to really get honed in on what you're investing in, the purpose of it, and understanding it, I think will increase the odds that you're going to be successful and reduce your risk of loss. So if you want to fail, just don't understand what you're investing in. So hopefully I covered a whole bunch of ground in here. Hopefully these things are not new concepts to you, but hopefully it gives you a slightly different lens when you kind of flip it on the outside. It's like opposite day, right? When you hear the opposite, you're like, it becomes so obvious, right? What to do. So now it's a matter of you taking actions slow getting into it. And I know some things change is hard, but getting, forward, taking steps to learn new areas, getting involved in taking steps forward and doing it over long periods of time. I think you're going to reap the massive rewards and ensure that you are successful financially, as opposed to following these 7 steps to ensure you're a failure. So thanks again for joining. Hopefully this was helpful, and we'll see you on the next episode of the Perennial Pride Podcast. Thanks for joining me on this episode today. I really am grateful for you as listeners to the Perennial Pride podcast. I hope you're getting some tremendous value out of it and hopefully pushing you along your journey to financial freedom. I put this podcast together really to help help you get more educated around your finances so that you feel empowered to live the life that you really want. And if you like the content that you heard today or watched, then I would encourage you to go to my website, perennialpride.com. There's tons of other content there. And you can access my book, Wealth Beyond the Numbers. You can buy it there on my website. It's a aggregation of a lot of great tips and tools I've learned to not only build my wealth in my accounts, but build wealth in my life and abundance and joy, and something that has a lot of my experiences in the journey that I've been on personally. Hopefully that can be also of value to you as you sort of move forward. So thanks again for being a Perennial Pride listener, and we'll see you on the next episode.